Welcome to Nation in Conversation. I'm Theo Foster. With me today is John Hudson. He's from Nedbank. John, one of the key issues currently in the agriculture market is the debate around expropriation without compensation. Now that's a mouthful. And one of the sectors that obviously need to position themselves and need to watch this debate closely is not only the agriculture sector, but the banking sector. Give me a synopsis of where the banking sector is positioned in terms of property and exposure and agriculture.
Yeah, Theo, thank you. I think if you look at the whole land issue, it's not only farming land. So let's make that point to start with. I think there's also a lot of focus on urban land. But for this conversation, I'm going to talk about farming land and how we're approaching it, the possible impacts, and so on. So if you look at total farming debt, and I'm going to explain it more from a commercial bank's point of view, but the total debt in the sector is about 170 billion. Of that, about 40 billion is with Landbank, and 130 billion sits with the other big banks, the big four banks. And we are one of those banks, and we have our market share. So for me, the land issue is, I guess, very important to Nedbank. But what we're really comfortable with is the guardrails that have been put in place, and if I could call it guardrails, that this land issue is to be resolved in a sensible way, and that's probably what really gives us comfort from Nedbank's point of view, in the sense that it is not to be at the detriment of food security, employment, the economy, etc., etc. So from a banker's point of view, just to go back to the 130 billion or the 170 billion for that matter, which includes Landbank, most of that debt is fully secured by land.
So that debt primary asset is land?
Yes. So if you want to split that debt further, you would then possibly take out your tractors and buckies and farming equipment. There's a chunk in there which is secured by those farming assets, those movable assets. But if you take your short-term funding, let's say overdraft funding, or your long-term funding, in particular your long-term funding, so that's the purchase of farm properties, funding fixed assets or long-term assets, orchards, dairy parlours, etc. Most of that, if not all of that, a very high percentage of that is secured by land. And it's even more important when you go into longer term funding. And from a banking point of view, we do fund up to 15 years. And we tend to match that funding to the lifespan of the particular asset. So if you're funding land or long-term infrastructure, it's a 15-year time horizon, and therefore you do take land as security. Just to be clear though, banks look at repayment ability first and foremost. So the affordability is very important, but land as security is also very important to a bank.
Look, I think the question there therefore is land security. That means the land needs to be in private ownership, which is the other question that comes out of that, especially if you look at traditional land, some of the rural land. So you need the land in private hands, one point. But second point is you need a sustainable value of that land. So let's first just circle back. This debate on land that's in traditional areas, what would be required for a bank to get involved in funding that lands?
Theo, that is a tricky question, and I'm going to tell you why. Yes, you're quite right. Property rights is very important, and the protection of property rights, and to have a value of land is dependent on the ability to trade that land, which could be, by the way, long-term leases as well, as long as those are tradable in the open market. So I think that's the important thing, is that for us as banks, if we need to realize that security, is there value in it, and can we sell it into the open market? So it's very important.
So if the tradability is not there, it's very difficult to sign up surety against it.
Well, yes, because what is it worth then? Because all you then placing reliance is on the affordability and the repayment ability, and that is by by far the most important aspect. So you don't want to have to call on that land as your final source of repayment. But there are times when you do have to do that, and then you want to know that that asset has value. And if that market value starts to decline, banks will take a more conservative approach. And in fact, if there's no value to that land, they would be very cautious about longer term funding. And that's where it becomes tricky. But just to come back to your question about tribal lands and title deeds in that context, I think there needs to be more debate around that. Yes, I do agree, in particular in the urban areas, you would like title deeds to be in place because I think we can unlock a lot of value. There's a lot of underlying value that if people can get title to that land and then offer that to banks that could unlock it for home loans, etc., wealth creation, the improvement of your own property, and so on. When it comes to tribal land, it's a little bit more complex, I believe. Tribal lands, if you are given title to your 1 hectare of land, I think that title, yes, in theory, you can offer that to a bank, but I'm not so sure a bank would be in a position to go and realize their 1 hectare security in the open market. So we'd have to see how that develops. I therefore feel that there are different solutions for different parts of the market. Commercial farming, productive farming assets, which we've funded for some time, that will continue. And we feel that productive land needs to stay productive because of all those factors for employment and food security. Communal land, I think, needs a different approach and maybe a partnership approach involving the banks and involving government. So we have seen some good examples of the Jobs Fund, for example. Grain SA and Tonga Tulits, for that matter, have accessed funding, Jobs Fund funding. And if that can be blended with commercial bank funding, then I think we can, it's almost a blended funded approach, which AgBiz and BASA, which is the banking association, have been working on for some time. So I think the blended fund approach, whether it's for communal, emerging commercial farmers, or even in the larger commercial space, the blended fund model has lots of merit.
What I pick up from your discussion, as long as the debate and the discussion is rational, is based on facts, is logical, the banks are fairly comfortable with the way it's moving forward.
Yes, Theo. What is certainly very important, and I probably do need to stress that, we've had no internal communication to say, please step back from commercial funding on farmland. That's not the case, because we do believe that the way that this process is being approached is a rational one. It is a process. We are going through the merits of it. And what is pleasing to me, and this is the positive spin on this, is that there's a lot of discussion. There's a lot of positive discussion. And I think solutions are coming to the fore, because you've got a lot of different partners and role players saying, yes, we recognize transformation has to happen. The sector and the sort of agricultural landscape has to change. Land ownership must change going forward. So I think all role players actually recognize that, and that's a good starting point. I think the question is, so how do we get there? And what is the best mechanisms? And that's what's at play at the moment. And from a Nedbank point of view, I'm very happy to participate, and whether it's a land dialogue, whether it's an agribusiness chamber discussions, the BASA discussions as well, we've given our input into those submissions, those written submissions that have been tabled. And furthermore, Nedbank is going to put in its own submission as well. So yes, we will contribute to BASA, the Banking Association submission, and we will also submit our own submission, because we feel as a bank it's very important for us to participate, and to participate in a proactive way. So we are comfortable at this point in time. We're very happy that the guardrails in place to protect food security, employment, the economy, etc. And I think what's really critical is beyond the sector itself, and it doesn't take much to think about the potential knock-on effects and the multiplier effects. I think we all know that the primary agriculture is just the start. There's so much more to the sector. But we need the total economy to grow, and that's including the sector itself. So from an agricultural point of view, we want to see growth, definitely, but we want to see the total economy grow, because I think that's part of the solution as well.
I just want to add on to that. If you look at the Treasury's and Finance Minister's Nene's presentation to the international investment community, he puts the number, if we can get policy certainty, now that's not only the land issue, but broad policy certainty on critical economic aspects, it could add 0.4% permanent to our GDP growth per year. Yeah. And I think that's the kind of view that this might give us forward. I just want to confirm that at this point in time, as a bank, you are not changing credit policies because of this debate.
No, certainly not at this point in time. There is quite a lot of speculation. There is a lot, this process needs to unfold. It needs to be completed. So we need to participate and contribute to that process. But yes, as a bank, at the end of it, we want policy certainty. We want to know what the rules of the game are, so to speak. And I think if we get that policy certainty in place, then certainly those numbers will, it'll make a major difference. And that's what's exciting, is that we can grow this pie. It doesn't need to be split into 1,000 pieces. We can actually grow the economy, and not only from a sector point of view, but from a broader point of view. So Nedbank, yes, we're going to participate, and we're still positive.
Thank you, John. That was John Hudson from Nedbank. From me, Theo Foster, this is Nation Conversation. Good day.